में हैदराबाद, जहां पर हिस्सेदारी, पहुंच और समावेशन के जरिए जो गांव की अर्थव्यवस्था को कैसे बदला जा सकता है, इस मुद्दे पर आरबीआई गवर्नर एक सेमिनार को संबोधित करते हैं। आइए आपको लिए चलते हैं नेशनल इंस्टीट्यूट ऑफ रूरल डेवलपमेंट एंड पंचायती राज।
It also implies the deepening of services to those who have some modicum of access. And finally, it also means greater financial literacy and consumer protection so that those who are offered financial products can make sensible, appropriate choices. Now, it's without question that the imperative for financial inclusion is both a moral imperative as well as one based on economic efficiency. After all, should we not give everyone access to the services that everyone in this room enjoys? Moreover, if all those people had the tools and resources to better themselves through these financial services, would this not increase output, growth, economic prosperity, and of course equity? Now, it's fair to say that we've made tremendous improvements since independence. However, we still have some way to go to ensure widespread financial inclusion. The question one has to ask is, what are the key impediments and how do we overcome them? Now, without question, perhaps the most important impediment to broader financial inclusion is the economic condition of the excluded. And I say this without hesitation because world over, the poor, the small, and the remote are indeed excluded, and not just because the financial system is underdeveloped, but because they are hard to service profitably. Nevertheless, this is not a reason to abandon hope, but to ask how we can overcome the impediments in the way of inclusion and do more to bring these people under the ambit of financial services. Now, this is the time and age of acronyms, so I will characterize the impediments through the acronym IIT: Information, Incentives, and Transaction Costs. Start first with information. One of the problems is the excluded live in remote areas or may belong to communities or segments of society that undertake economic activity informally. They do not necessarily maintain records, they don't have signed contracts or documentation. They often don't own property or don't have regular established sources of income. As a result, if you're a banker like those sitting in the front rows, and if, as is typical, the banker is not from the local region, he or she will have difficulty getting sufficient information to offer financial products. The second impediment is incentives. Loans, as you well know, are typically available only if the lender thinks he will get repaid. When the legal system doesn't enforce repayment quickly or cheaply, and when the borrower does not have any formal collateral to pledge, the lender might believe that it would be difficult to get repaid and probably would be right. That is another impediment in the way of transmitting financial services. The third impediment, which shouldn't be minimized, is transaction costs. Since the size of transactions by the poor or by micro farmers or enterprises is small, the fixed costs in transacting are relatively high compared to the possibility of income. It takes as much time to help a client fill out the forms and to provide the necessary documentation if he's applying for a loan of 10,000 rupees as it takes to help another one borrow 10 lakhs. A banker who's conscious of the bottom line would naturally focus on the larger client in preference to the tiny one. Now, when we think of these impediments, it's also useful to think of an entity that has overcome these impediments.